I want to start my morning with something special. Last week, I took my daughter out on a coffee date. And we didn't go to Starbucks, but we went to the place right across from Starbucks, so I could see their drive-thru line the entire time we were there. So as I'm looking out and seeing this line and thinking about what they charge for a cup of coffee, I was thinking, Starbucks stock needs one more look. I got to go back and look at it one more time. So while I'm not about to give you investment advice in any way, I'm going to tell you what I thought about and what I found with this company, and I'll tell you whether or not I personally will be investing in it. If you're not familiar with what this channel is, I'm a poker player who invests my winnings into the stock market. Would love to have you along for the journey. If you would like to see future videos, click that sub and like button down below. Now let's get into this further. First of all, stock price. If you take a look at the 10-year chart, we haven't done a whole lot recently. About 2019, the price there, $99 a share. We're below that currently. But if you go back 10 years, you're looking at, $34. That's a pretty good return on your money. You've basically tripled it just in the share price. Now, if we go through the revenues look strong. Again, great, $36 billion in revenue. If you go back to 2013, $15 billion in revenue. So we've more than doubled revenue over the 10-year period. Now, looking at free cash flow, you can see about 10 years ago, $1.76 billion in free cash flow, currently sitting at $3.68 billion. So again, double. That looks pretty good. If we look at the cash and debt ratios on this company, you're looking at about $21 billion in debt, and we've got $106 billion as a total market cap. So 20% of total market cap, not a terrible amount. Now, dividends, been a strong run here. 2023, 57 cents per share. Going back to 2014, we're sitting at 13 cents per share. So nice increase there on the dividends. Really strong there. Shares outstanding are coming down. Now, if we look at return on capital employed, you can see last year was 29.2%. That's fantastic. Great return on the money that you're lending to them as far as what they're returning to you. So there's the financial side. Let's look at now a positive article and a negative article to try to get some more feel for where this company's at. First, let's talk about the positives. This article is talking about that they think the stock is underpriced, that it should be much higher than it is, that it's down 11% the past year, is much lower than its 52-week high of $115, and it's a good, consistent dividend payer. The company is already on an aggressive expansion spree in India, and Starbucks aims to open 2 stores each week in the country and gain exposure in the most populous nation in the world. It reported blowout results in the third quarter with a record high quarterly revenue of $9.2 billion, up 12% year over year. So I've got part of a negative article here, and I'm just going to highlight this piece. In October, the company came under heat for its response to the Israel-Hamas war, prompting boycott calls from both sides of the conflict. A month later, some of the company's unionized stores went on strike. And in December, a third-party report commissioned by Starbucks in response to shareholder pressure found that while the company didn't purposely engage in an anti-union campaign, it had bungled its response to the rise in union activity, resulting in significant negative consequences. This next article is about a company that I currently have in my portfolio that I like a lot, and that's McDonald's. Now, McDonald's is just good at what they do. Now, Starbucks is really like, they take a lot of what McDonald's does well, and they do it on the coffee side of things, right? So they're basically this little box that can just produce the same thing over and over again with consistency and with speed, and the customers appreciate that. McDonald's does the same thing on the food side, and they've just barely dabbled in coffee, right? You can get a warm coffee, a couple of things there. Well, now they're trying this new thing called Cosmix. And Cosmix is basically trying to attack that market share that Starbucks has in the coffee world and pull people away and bring them to the McDonald's side. So let's read this article just a little bit. All right, check out the opening line here. Cosmix, McDonald's new Starbucks competitor, is a mix smash. All right, new data shows that the first location of the new concept, which focuses on specialty drinks and a few new menu items, received more than twice as many visits as a typical McDonald's over the same period. New drinks being offered by the restaurant include Sour Cherry Energy Burst, Berry Hibiscus Sourade, Island Pick-Me-Up Punch, Blueberry Ginger Boost, S'mores Cold Brew, Turmeric Spiced Latte, Churro Cold Brew Frappe. We won't read the rest of the article, but basically what's going on is that McDonald's is going to start eating into Starbucks market share potentially. They're becoming a competitor in a new way, and I think that's actually a problem for Starbucks. Now, Starbucks has had a lot of success being able to raise their prices over and over again, and their customers continue to come back. At some point, there must be a breaking point where $7, $8, $9, $10, there must be a point where people say, you know what? I'm not going to pay that much for a cup of coffee. And I think that's where Cosmix can also undermine Starbucks, is maybe coming in with a lower price point and some products that are more affordable. As we talk about price increases, let's look at total debt balance amongst American households. That going back to the 2008 financial crisis, right before that started, we had $2.69 trillion in non-housing debt. Now, housing debt load about $10 trillion. This never really drops. You can see that even as the housing debt amount is coming down, look at the non-housing debt. Never really drops off. In fact, it goes up a little bit. So here's the peak of the crisis, 2.69. Here's the bottom of the trough, 2.77. So that never really goes away. But now look what it does here. This gap starts to widen and widen and widen. And now we're at $4.8 trillion in non-housing debt. And what you're going to see is that the American consumer is like kind of losing some buying power here. We have a ton of housing debt. Now we have a ton of debt in boats, cars, and all those things, but credit card debt is exploding, and there's a point where you're just out of money. You just can't continue to go to Starbucks and run that credit card. Now, this doesn't necessarily mean that all Starbucks customers are going to be in this spot. A lot of people, maybe they have plenty of money and they're able to afford these drinks. But as prices continue to go and the consumer is losing strength, this is just not a great combination for Starbucks, who is... You're talking about, necessary things that are going to be kept around, your fuel and food and things like that. Starbucks kind of falls into that habit, tobaccos and things like that, where, yes, you've got people that are like, oh, I want to start my morning with something special. And so they're willing to go to Starbucks and try to buy that super expensive cup of coffee. But as that pressure cranks up over and over again on the wallet, eventually there's a breaking point where you go, okay, I'm cutting it back. Maybe I'm not done with Starbucks, but now it's once a week, or it's twice a week instead of every day, or whatever it is. But I think there can be a decrease for their revenues in the future. Not only do they have the competition, not only is the American consumer getting killed, but now let's look at this. Now, this is the Starbucks Workers United website. I want to take a look at this, but before we do, I want to preface this by saying I think unions have a place in the workplace. I think jobs that are very dangerous, jobs where employee safety is a big concern. For example, if you are an electrical worker, if you are a machinist, if you are doing something that it makes sense for your wages to be negotiated and it makes sense for you to be protected from the harms of your job. I think that was the goal of unions originally, was, hey, how do we prevent guys from just dying on the job? How do we prevent these agonies from taking place to the worker? When I think about Starbucks, I don't think about much agony. You're going to have a hard time convincing me that you need a union there to negotiate wages and all this, when currently Starbucks is offering an incredible opportunity where you can not just get into the store, pour a cup of coffee, get health benefits, help with school, all those things, but then additionally, there's opportunities to rise up in this corporation and go from someone who is pouring a cup of coffee to someone who has a great paying job, whether you're a manager or moving up the scale even farther. The point being, you could start out pouring coffee and have a career in that field. That's a pretty amazing opportunity considering what the work is. Here's the whole thing I'm trying to get to. Starbucks unionizing, I think, is going to hurt the business. They've already had some strikes. They've already had some problems with the unionization process. And I think as Starbucks employees start to push back and demand higher wages and all that, what does that do? That's going to mean that your cup of coffee now costs even more money. How much are you willing to pay to feel so special that morning? I don't think you're willing to pay a dollar amount. There's a point where you go, whew, too much. I have to cut this back. All right, I want to show you something. Here is the chart of the dollar's purchasing power since the Fed was created. Now, if this chart doesn't convince you that the Fed is not good for us, I don't know what will. Here's where the dollar's purchasing power started when the Fed was created. Here's what it has done over time. It's just completely eroded. It's completely fallen apart. So here's the opposite side of that equation, which is the dollars that are circulating. Inflation is common. It's not a good thing. It's not normal necessarily, but it's been normalized by the Fed continuing to print money ever since we took the dollar off the gold standard, right? So boom, 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 boom. This dollar is constantly being printed, and therefore it's constantly losing purchasing power. All right, so really there's some big factors here, right? We have new competition, a high debt load on the consumer, labor that's probably going up as they unionize and fight with the company over all these things, dollars being printed like crazy. So that means that cup of coffee is just going to go even higher. I could see why people would make an argument for purchasing it. However, I personally am not going to be making that move. I think there's too many headwinds fighting this company, too many things that I don't want to see happening for me to continue in Starbucks. Well, there's what I think, but what do you think? Are you buying this stock? Do you like it? Do you dislike it? If so, why? What do you agree with me on? What do you disagree? Leave a comment down below. Thanks for being here. Hope you found this helpful. I'll talk to you next time.